All right, good evening, guys. Ken of Tortoise Capital, nightly strategy podcast for February 8th, 2023. So, yesterday we looked at IT. That had a 7 sigma daily move, and so we thought we'd take a look at that. This was one that could have been, that was yesterday's 7 sigma move, by the way. It looked like a move from down here all the way up to there. And we said critical state, that thing could either go north or south. So the idea was to put a tight risk box around that. Here was the opening. That's a PSAR flip. That's an MMRB. That's the short. That's the notice the PSAR is your friend the whole way down. Exit. There were 2 logical places where you could have added a position with COTA 2s, especially this one, because it's also breaking down below this. And then it comes right back to the resistance level or support level. So you can see yesterday's gyrations were a giant shakeout and then a follow through. But then today was just opportunistic selling. So critical state, we don't know which way it's going to go. Don't really care. There's just a increased probability that it'll go large, and it was large enough to get paid. All right, quick look at the swing portfolios. So yesterday, this is Alcoa. On the breakout above this, we finally ended up with this move. Gap down today, started selling off, so we took the exit. So that's a -1 on this trade, because that's the joy of swing trading, by the way, is the gap. Then here is a stop and reverse, and we're holding this one right now, so that's same risk box. And this is about 2R in hand. Could have exited here or here and paid for the loss, but this one felt like it had more in it, so we're holding net 1R on -1 and +2. Cliff, we're short. Let me scroll this back to the, so Cliff, that was the directional breakout box. We took this one short. It was here today. It gave back a little bit. This would have been a reasonable exit in here in order to cash the win, but it's a swing trade, and I want to give it three days. CVS, this was the breakout box short that we scratched, then missed this move. There's the gap. Yikes. So we took the first reasonable entry, standard risk box. This thing, I should have just gotten out of this and leave it alone. But this thing, the size of that box and the size of this move suggested to me that there may be some more upside in this. So I'm willing to keep the stop in place. Tomorrow, if this starts failing, why not just get out of it? So that'll be my plan. I'll raise the stop and try to get out of it. Devon Energy, our breakout box was here. Our stop is still here. Could have gotten out of it in this region today after a nice trade. So it runs up and peaks. The size of this sell-off after a peak and the size of this sell-off after a peak makes you just ask yourself, doesn't it? What was wrong with this trade and just getting out here? In the very first time period, you get all of this move, which is what we're still holding on to at the end of 2 days, but after having enjoyed this roller coaster of emotional rides. So in my view, uh, if you are full time, there's nothing wrong with this exit and this re-entry and taking your profits somewhere in here at the end of the day, then having a non-directional bias to give you that. If I've got time, that's why I prefer the intraday trade. Just is a lot easier. But where this one is right now is here, and I'm going to raise my stop now to the low of the day so that I can lock in that gain tomorrow. If this breaks out above this, I will raise my stop up into here to lock in that piece if I can. I would think about adding a position if it can get above 62.70. That's the joy of swing trading. So back to the 30-minute. So that's what this thing looks like on the 30-minute. The entry was here on the breakout box. Stop was here. And I notice it's holding here. So is there reason to believe it could do that? Sure. So tomorrow, just raise this to here. Again, lock that in. Devon Energy on a 30-minute. Emerging markets, holding the long from here on the PSAR flip. Stop is still here. It's a fraction in the money. Just let it roll. Mexico, that was the -1. This is the COTA 2 short. Still in the money a little bit. My stop is still here. Brazil, no trade. This was an opportunity. I looked at it today, just wasn't feeling it. There was a trade there. No position on that one. This is international paper. Here was the breakout box. There was the collapsing dragon. That one's in the money. I'll add a second position tomorrow if it breaks below the low of the day. We zoom out at that one. Yeah, there's more room for this to go. Like if this breaks, our target would be over here. So another chunk, just like today, there's another chunk available. That's why I want to add that position here. Probably move my stop down to like this. Real estate, we closed that one yesterday. I'm noticing the COTA 2. I could see a entry tomorrow, like if it opens here and then takes off without making a new low. I could see that as a long position tomorrow, right about here, with the idea that if it clears that and clears all this, it's the next price level's up at 95, so that would be 2 units. If that's a unit of risk, 1, 2, 3. There's 3 available up to there. So IYR is setting up for tomorrow. McDonald's, just nothing. Dead money. No position. Marijuana, we were short on this one yesterday with the standard risk box. It was failing nicely today. Let's move our stop from here down to about there and lock in that little piece for tomorrow and let this continue to roll. I am hoping to see it come all the way back to like 640. Clean energy, just missed this. God, I just missed that one altogether. Where was I? Collapsing dragon. But today on this one and then the rollover, we did take that one, standard risk. trying to play catch up. If it fails below 45, I will add another position tomorrow because that's so close to this collapse that I'm grateful that I got that position in. Should have been up in here. So I forgive myself and let's go. S&P on the 30 is hovering right at a critical state in here. It's had one surge up, it just as quickly failed today. So a fail below 409 suggests it could come back to here. Taking off from here, it's tentative until it breaks above 415. That's the crucial resistance. If it gets there, then the 30-day high at 418 is in play. So critical state tomorrow. Watch that one for a breakout in either direction. Treasuries. I just missed that stop and reverse yesterday, so this was an effort to go long. We took the half our loss. I did not take the stop and reverse. That was tradable, but it's right back to this price level, just stalking it. Tesla, just stalking it. U.S. Steel, yesterday, you will recall, we cashed that short. That was a one-day gift. Today, I took the SSC with a tight risk at the belly of the dragon. So the stop is still in place. I like the way this closed today. We're about 1 hour in hand. And then this is not much resistance at all until it gets back up into here. So if it can get above this little hump of the dragon, it could close that distance pretty quickly. So I like that position, and I'll be ready to add to it tomorrow with the turbo intraday. So those are the swing trade updates. Let's see here. Here's our sniper trade. Oops. Yesterday's close. This is in Treasuries. That was the OR3 today. That's the OR3 short. That is the standard R10 manageable risk. Notice that is larger than the PSAR flip and larger than the OR3. So you take the larger of those. Just an orderly sell-off, orderly exit at the PSAR. The PSAR is your friend. And that gives you about 2R to there. SSC fails. COTA 2 short fails. SSC. Notice that the RL10 does not break the PSAR. So when it doesn't and breaks out, second position, which is above this, that's an ED, that's a very strong sign. A burst, so that's a gift, so we'll take that position. So 2, 0, 0. This one scores 1, 2, 3, 4 on the first one, 1 on the second one. That's plus 5. PSAR flip, late fill, standard risk, 0.5. That pays for all the slippage and cost of trading. COTA 2, you could also call that a PSAR or an SSC, plus 2. So that's about plus 9 for the day on Treasuries. Trust the PSAR. Oops, let's get the traders. Satya. Here's the open. He waits for the emerging dragon and the OR. There's the OR3 standard risk box. Gets paid for 1.5 and happy. Keeps 20% as the swing. So he's got a nice swing trade building to carry overnight, paid for by the intraday trade. You don't got to overtrade. This is my brother Bill. He's using his sniper on the NVIDIA on 10 minutes. That's his standard entry. That's his 2R battle drill automatic add. It rolls over. He exits everything. 6.7R. Net's 1300 for the day. 10-minute chart. Woj. He tries the OR3 breakout, scratches, tries the PSAR flip short, takes a -1. Re-entry on the supported fall crossing, makes 2.5 in there, net's 1.5. In Tesla, -1 plus 2.5, net's 1.8. Quick scratch. Gets paid a fraction here in U.S. Steel after some morning sluggishness. Net's -1.5. NVIDIA mucks around, recovers partial for the day. All that work, but still +1. Patience. I'll just draw this again. There's your PSAR flip. There is the PSAR. We should be short right about here with a risk box right there. Trust the PSAR and exit here instead of 10 trades. That's probably one trade and then a re-entry. The OR3 is an advanced technique, doesn't always work. He tries the breakdown, takes a -0.8. He does get paid there and makes bank. That covers this. This is a great short and re-entry. If you're going to keep doing that, then you got to get short right away. You're not taking advantage of the big move. Widen your stop, trust the PSAR, pretend you got 3 bullets, and you got to bring home 1 rabbit. Make your shots count. Don't be frivolous. Same note, Gary, see my notes in the chat room for detailed coaching. We'll take a look at the reports now. Let's see. Dashboard 1, bullish normal. So we've had a 2-day pullback, but we still got residual strength. Still risk on neutral. That's all good. A couple alerts for possible long side trades in the internationals. Finance is making a strong move here. You got AXP, Goldman, JP Morgan, and the finance sector itself, all min pains. Lots of auto framers still available. You have some 5DDs here in Home Depot at 3.9 to 1. Nike at 3 to 1. That looks promising. Tesla still showing some strength. Closed above 200. That's a good thing for Tesla. ETFs, a bundle of auto framers, plenty of triple screens so you can reward strength on buying on a dip there. Also, the 551Ws offer that same kind of strong pullback and resumption. Gives you like a Kata 2 flavor for those of you looking for mechanical swings. Those are frameable. Lots of auto framers because of the distance to the 10-day high and the relatively small range of the day. Lots of squeezes will also happen on a day that has low range. And I'm not sure why that's giving me a blank screen here. Oh, okay. Somehow the zoom function zoomed way out. Sorry about that. Okay. Quick look at the fractal framework. The deep value plays. These are the one. This is how many ATRs below their fair value they are in that frame of reference. United Health, Pfizer, Johnson and Johnson in the healthcare, Coke and Chevron. Then the overheated or the relative strength winners, how far ahead of their own RL270 are. So Nvidia's got the juice, JP Morgan. Nvidia is 8.5 ATR above its fair value. JP Morgan 8. In the sniper, we've got in Godzilla, we got LUMN. You can see that it's wicked oversold and has been very volatile on both the 5-day and the 3-day. The same with JKHY. So those are both Godzillas that are in play with large ranges. Whereas Electronic Arts is a little stealthy Godzilla with small ranges on the 5-day and 1-day. So after a large sell-off, indicated by these single digits in here, and the 5-day range is small and the 1-day range is small, that's a bracket trade ready to break large in either direction. So let's go look at EA for a moment. See what that guy looks like. TC2000, you are a friend of the team. Run down to EA. For some rapid framing. Zoom out to the daily chart here. Yeah, so in the sniper frame of reference, this is your 150-day look back, that larger outer square. And you can see that price down in here is way oversold from the 150-day high. And then inside the 30-day, which is the black box, it's also oversold. And then the 10-day, which is this box, is way oversold, all because of this great big gap down. However, the 5-day range is relatively small compared to previous 5-day ranges. And the 1-day range is also very small. So what you have is a consolidation happening here. You can see that's failure to fail further. Now the RL10 is still well out of sight. It's, the RL10 would argue that this is where that price should have been. Like if the sell-off were going to continue, you would just protect. It should keep falling like that, but it hasn't. It started to stabilize in here. So the distance between the closing price and the predicted RL10 price, you're starting to see some buying pressure that has prevented it from falling to the natural price level. And in fact, that you got a 1-2, almost a 1-2-3 developing here. So you could now think about this as a, what if I put that kind of a risk box on it and just automatically bought it from here and then tried to get my stop above that entry level as soon as I could, with the idea being that somewhere between this price level and, in this case, somewhere above the top of this sell-off, getting back to this piece gives you that much reward, and that would be your first hurdle if you can get through it. Then you say, all right, if it just gets halfway across here, then 122 is a target, and then the PSAR flip is a target, and then back to this price level is a target. So you wouldn't have any compunction saying that, look, if it does violate below 112, I just want to be short. But the trade in the other direction out of this little risk box does have some possibilities for some kind of grinding action. That's what a Godzilla trade finds for you on a moment of quietude. Look how small the 5-day range is compared to the 10-day range, and that's because of all the volatility that's in here. So the fact that this 5-day range is compressing is telling you that all of the negative emotion associated with that sell-off is gone. It's finding its new price level, and with just a hint of buying pressure, you could see how that could start to work. The reasoning would be is it's had 3 days to fail further, and it hasn't. So you could wait and see tomorrow. And zoom down on the on the 30-minute chart. Here's the 30-minute chart from today. That's not a panic day. That's what panic days look like, and now this whole thing is holding. It's had 1 fail, 2 fail. It's had a couple attempts to go long. They couldn't entice new buyers in, but there's no new sellers. That's holding. And so you got a series of rising PSAR bends. Didn't close well today, but to me, I'd be looking at that tomorrow. I will be looking at that tomorrow. Like if you could get an opening here and it takes that out, that's a pretty low risk trade if you put an entry here and an intraday stop, call it here, bottom of the dragon, and risk $2. Could it get $4 from here? Well, let's see. There's 1, 2, 3, 4. Yeah, it could do that. That's on the 30-minute chart. The R10 on that is 30 cents. This thing can move $3 intraday. So now if I zoom down and look at a 3-minute, just from today's action alone, after that harsh winter that bottoms out and PSAR flips, $0.30. And even if you just took the trade to there, you could have made 2R and then used the gain on that move to fund tomorrow's swing trade. So this thing is tradable intraday. That's a Godzilla quick analysis, how to find opportunity on a wide field of choices. So that's the beauty of a stealth Godzilla, is that there is a lack of panic buying and selling. Whereas if we went and looked at LUMN, what's the difference look like there? Let's see just what the difference in a green abnormal volatility looks like. Lumen Technologies. So let's go out to our daily chart. Where were you in my life, huh? Collapsing dragon, collapsing dragon, collapsing dragon, collapsing dragon. From 11 to 5. Where were you in my life? And now a great big sell off gap. So that's sort of, so now you can see the size of the 5-day range. That's why that's such a large Z score. And then the size of the 1-day move was pretty large. So you may not be interested in that one. It's an S&P 500 company though, but that's pretty thinly traded. No further panic after the sell-off. Just on the basis of why not? Why not buy it at 4 with a 25-cent risk if this starts breaking out? I would tell you, if it gets above 420 and the gap was 5, that's an 80-cent. What if it just gets halfway and that's 40 cents? So if you could buy it at 4 and get to 450 on a 25-cent risk, that's 2 to 1. So we'll come back and revisit Lumen and Electronic Arts, LUMN versus EA, and that's the difference between a volatile Godzilla and a quiet Godzilla. My brother says the other Godzilla JKHY looks interesting. That was off 9% today. Probably another earnings gap. Yep. And the intraday move on that, it gets smashed in earnings. So that's really the new consensus agreed upon price. Yep, there's your harsh sell-off. And you've noticed that thing is far, far away from any support. Now that it's down here, ready to break, the next support levels are down here. Another minus $8, and another like $18. Yeah, this thing that's not recovered anytime soon. So the short side, old Jack Henry and Associates, there's nobody who loves those guys, I'll tell you that. So that's going where the fish are biting. That's what the Godzilla pattern gets you into, is unusually interesting opportunities. Okay. Looking back at our usual suspects, the 1-day movers is the one where I'm looking for the largest 1-day Z scores. That's where like United Airlines is in there, Lumen is in there. That's how we got into IT yesterday. IT yesterday was a 7 sigma. Today is almost back to normal volatility. That's why it's an interesting trade now. In our most volatiles, again, I like looking at the double greens, and I look for symbols that I recognize. There's a UA and Lumen right at the top of the list. The mercantile exchange itself. Now, we've traded that one in the past on a Godzilla. So let's go see what our friend CME looks like. That's the Chicago Mercantile Exchange. Wow. This thing took the Kata 2 and the Emerging Dragon breakout and gave that kind of a one-day move. Oof. Already gone. On the other hand, it has cleared all of this resistance. That's all a thing of the past. And now with a nice breakout box here, you come over here and say, it doesn't get any resistance till about here. So there's another $5 to the upside. And then here, another 5. So there's $10 more of upside movement in CME. And the intraday, 50 cents on the intraday. This will just make me cry like a baby when I look at this. Yeah, there's your move in CME today on the breakout. Wow. And this is that's a $1 box, and half of that is your standard MMRB. Man, oh man, that'll make you cry. So, finding the movers. And one of the things that you get with the TC2000 bundle is the ability to find them, frame them quickly while they're moving. Something to think about. All right, let's go back to the reports. The sniper set, our sniper stats for the tactical set. Mexico is always interesting to me. It's a frog champion. It's the only one in our tactical set that has a 5-day large volatility, and then VIX and Microsoft are the only ones that have a large move on the 1-day. So that makes Microsoft instantly interesting to me. Let's go see what that looks like. I'm going to go back to my personalized set. So here's Microsoft in his life cycle. Nice recovery from that harsh earnings sell-off. Oh, man. There's your SSC. Here's some Kata 2s. There's an Emerging Dragon. And still rolling high, and then closed in reverse for the first time in a long time back here. So it's got this run up and then roll off. So now that begs the question, is his run done? So on the 30-minute, notice you've got some really nice Kata 2s in here and generally running the whole way up. And now the gap up and rollover, PSAR flip and closed poorly. That is a warning sign, which says so you got to just stop that. This is what matters. The roll off and closed weekly, and here's your next price target on the downside if that fails. And then if this support doesn't fail, the next one is not down to about here. So you got a couple nice chunks of downward pressure in Microsoft if this support level does not hold. If it does hold, you've got an interesting move to the top of the stack and the top of the day. but not till it gets above 275 does it become persuasive. So you have a little bit of tactical trading here, and then you have a really important price level right here. Is this going to hold and provide support, or is it going to collapse and let people fall down into the well? Call Lassie. Timmy's fallen into the well. And you got a couple clear price targets to the downside to work with. So Microsoft will be one, again, that we look at tomorrow. Okay? All right. Why does that stand out? Because Microsoft was in play today. The only one in that whole tactical stack that had a large range day. So it's in play. That was a large range sell-off day, too. Just saying. That's what a warning looks like. That should tell you something as well. Tesla and Merck are the only signs of joy on an otherwise yucky 2-day series. Oil strong. Latin America strong. And finance is, finance and the industrials are holding up pretty well compared to the other XL series. That's all the sector spiders like materials, energy, finance, tech, staples, utilities, healthcare, that kind of stuff, right? So industrials and finance looking pretty good. And finally, in the trading value list, the ones that have the highest combination of large ranges and reliable ranges: Alcoa, Ethereum, Clean Energy, Tesla, Oil Exploration, your top 5. That's a pretty attractive number right there. A large intraday move, moving almost 5% of its capital value. Man. Even more volatile than Tesla. Would you have bet that? Would you have bet that Alcoa has been more volatile than Tesla? That's the value of this analysis chart right there. All right, that's everything I got for you today. Let's get this published and processed and be ready for them tomorrow.